Hello, everybody. This is your old buddy Romulus. And once again, I have joined you from the Forum of Ancient Rome to help us understand what is going on in these modern markets before we kick it off for an excellent weekend. I don't know about you, but in my part of the world, there are real winters. We have snow, we have ice, we have cold, but that's gone. It's gone, baby, gone. Springtime is here. Birds are chirping, flowers are popping. My dog is hopping, and I'm excited for it. So let this be one of the last things I do this week, at least on a professional basis. Let's go to the markets, everybody. So S&P 500 up again. This is 4 days in a row. Not unusual considering how beaten down things have been. Yes, there's a lot of bad news out there, isn't there? Sure there is. But I would advise everybody to go take a look at 2008. If you want to get an idea about what can happen in markets. That was a terrible year. There was bad news all over the place. And yet on occasion, the market bounced. Go look at 2001. Bad news all over the place. Bad things happening everywhere. And yet the market found occasions to bounce. As a matter of fact, the NASDAQ 100 had a couple of bounces of over 50%. That's right, over 50%. Can you believe that actually happened? It did. That's right. It helps to learn your history, everybody, which is why I call myself Romulus. I started my career all the way back in 1994. Can you believe that? 1994 at 67 Wall Street. No longer a broker-dealer in that place because that's what I was. I was a stockbroker. Right now it's a condo. As a matter of fact, there are none of the major investment banks and brokers left on Wall Street. They're all condos, apartments, hotels, nightclubs, bars, restaurants. There's even a Tiffany's. What change? What change? Speaking of change, the market's character has changed a little bit, hasn't it? January 4th hits an all-time high. Then we have a series of lower lows and lower highs. And by the way, everybody, that is called the downtrend. Is the downtrend right now being disturbed? A little bit, sure, because the last swing high right here has now been taken out both on an intraday and a closing basis. Also above this downtrend line right here that you see. Yes, there could be some upward momentum still in this market, more likely than not. However, there's a lot of proof to come to the table here. Everybody from Missouri should be understanding what I'm saying right now. A lot of proof, and we don't see that quite yet, even after the bounces. That's why I say go back and look at 2008. You can see, things can get a little bit dicey and still get hit, rebound, get hit, rebound, get hit. Oil prices, speaking of volatility, this is something to behold. Down 28%. You realize this was just a handful of trading days. It shoots up right around when the attack takes place, drops 28% from the high on March 8th to the low from a couple of days ago on the 15th. A week. In 1 week, it drops 28%. That's a massive pullback. Then has a nice little rebound yesterday, over 8%. How about that? Pulling back a bit today. Something to keep a very close eye on for the rest of the year. Oil and energy stocks have been the belle of the ball for a while now. Yes, that's true. Let's see if that can continue, everybody. Let's see. The big news of this week, however, was not the war, thankfully for a little bit of relief from the sadness that's going on over there. But it was the Federal Reserve. Jerome Powell, interest rates. They raised interest rates for the first time since 2018. But they also told us something incredibly important. Thank the good Lord for Jerome Powell and his wisdom. He told us, are you ready, everybody? He told us there's little risk for a recession. Little risk for a recession. So Jay, let me ask you this. Is that the same thing you told us back in August at Jackson Hole? That the inflation that we were seeing back then, the little sparks of it was transitory? Was that it? Exactly. So it makes me wonder, everybody. It makes me wonder. I know I have a bunch of words on the screen, but I'd like you to focus on something very particular. This is a portion of a speech given by then Federal Reserve Chairman Ben Bernanke on October 15th, 2007. Note the date, October 15th, 2007. Now, he had just spent several minutes talking about the challenges and difficulties that were already arising from tightening credit conditions because of the faltering U.S. housing market. He already talked about it. He acknowledged those problems. But then listen to this. The banking system is healthy. Let me repeat that. The banking system is healthy. Despite a few notable failures, Hedge funds overall seem to have held up well, and their counterparties have not sustained material losses. The banking system is help. Are you kidding me? Folks, that marked the exact high of the stock market right before heading into the second worst year in U.S. stock market history. 2008, second worst year in U.S. stock market history. By the way, your old buddy Romulus posted a double-digit return that year. How about that? Beside the point, that's one of the reasons you can't listen to these guys. Jerome Powell told us in August, inflation is transitory. And by transitory, Jay, do you mean 50 years? And now he's saying, oh, don't worry, everybody. There's little risk of a recession. Bernake at the very top of the market, October 2007. The banking system is healthy. So, Ben, was that before Lehman Brothers went bust and Bear Stearns disappeared and the greatest banks in the world crumbled to almost dust? And if it wasn't for the tremendous generosity of the U.S. taxpayer, JP Morgan, Goldman Sachs, Citibank, Bank of America, on and on, they wouldn't be here today. They wouldn't be. The banking system is healthy. Are you kidding me? Don't listen to these people. Do not listen. They're not lying. They just don't know what they're doing. They're government bureaucrats. 10-year showing you that. I mean, look at this march to multi-year highs. Inflation's a problem. It's not transitory. And regarding the comment of little risk of a recession coming, heck, if you ask your old buddy Romulus, I'm here to say you're already in a recession. You're already in one. He just doesn't know it yet. All right. So as I mentioned, S&P 500 posting a couple of days in a row up here. Can go higher. Has resistance at the 50-day right there. Has resistance at the 200 a little bit here as well. That could be issue pending over the next couple of trading days, maybe a week or two. And again, rally could continue. But between here and the end of June, market between here and the end of June, and it could take all that time to get there, that low on the 24th of February, bye-bye. Okay, bye-bye. All right, this is Romulus with Backpack Trader. Thrilled to have the opportunity to share a little bit of your Friday time with you. If you're watching it over the weekend, I hope you're enjoying it. I know I will be. That's all I've got for now. Next week, I'll be coming back from ancient Rome. Take care.